All right, let's bring in Kevin Green, who I'm very pleased to say joins me now to help set up the action today. And we got a lot of information while you and I were punching out the Z's overnight. Kevin, at the stroke of midnight, we got more tariffs on dozens of trading partners. In Trump's words, billions of dollars in tariffs are now flowing into the United States of America. We also, which is something that I look at very closely, which is correlated to all of this, is resilient Chinese exports up over 7%. I mean, what does that tell you about who's winning in this as we now look ahead to the next deadline, which of course is August 12th? So as we get set up for this trading day, I mean, we're very data light, earnings heavy and tariff headline heavy. What are you watching?
Well, obviously, we are seeing a nice little bounce to the upside here for the S&P 500. That's really after the comments from the White House yesterday, as well as Tim Cook, around Apple's ability to try to increase investments here in the United States, and then also getting a little bit more clarity when it comes to the tariffs around semiconductors. It seems like the market is actually very pleased with potentially some of the developments that we might see over the next couple of weeks. Now, you kind of brought up China and the export data. This is actually something that could have been a front running of these tariffs kind of going into place here. We know that there is a little bit of a pause when it comes to the China tariffs, but once again, they're trying to probably get as much supply out into the market as possible before those tariffs actually really do bite and impact their own economy here. And China, for the most part, has been a little bit lackluster when it comes to their export and import data, and it's been very volatile. So I think right now the market's, once again, a little bit happy, especially when it comes to the semiconductor side. I know that President Trump actually announced 100% tariffs on semiconductors, but if you kind of look at some of the other commentary coming from President Trump, talking about those that are actually investing in the United States or have plans to invest in manufacture here in the United States could actually be exempt. And if you kind of look at each of these companies that have foundry businesses in the semiconductor space, almost all of them are building out here in the United States. So even though he's saying 100% tariffs on semiconductors, that actually is going to probably be a little bit more of a smaller subset given the flexibility that the administration has. So I think that once again gives a little bit of optimism here for the markets, as well as maybe a little bit of a reprieve, maybe some buying of the dip over the last couple of days after that pullback that we saw on Thursday and Friday of last week.
Yeah, it seems very much that the markets are looking past the tariff headlines and more cheering the exemptions that we've heard from various announcements from the Trump administration. I mean, you mentioned Apple. I want to dig into that a little bit because we've really seen the art of the deal at full play here. I mean, you invest $100 billion and we'll give you some exemptions around some of the tariffs, particularly from places like India, which got slapped with an increased duty just yesterday. It's been really interesting as far as this stock is concerned because it has really been an underperformer, particularly when you look at the Mag 7. Then we got the earnings announcement, some hint at M&A, which seemed to put the wind back in the sails of this. And now it seems like the tariff overhang for this stock has somewhat been lifted. And now, obviously, we've seen Tim Cook at the White House, which is going to offer maybe another leg higher for this stock. What are your thoughts?
Yeah, a lot going on when it comes to Apple. I think there is a technical setup, if you're looking at the chart, that could make the case that at around that $200 level or so, maybe some buyers could step in just because of the oversold nature of this company and that catch-up trade here. When you're kind of talking about these tariffs, and I know that we just kind of concluded on this, but the India tariffs were actually very interesting because there is a carve-out for Apple that is going to be obviously developing a significant amount of iPhones coming out of India. So the fact that they are making this gesture yesterday, increasing the spending here in the United States by around $100 billion. This is on top of the previous $500 billion that was announced earlier this year. Having that carve out kind of signals to the market there's a way and a path forward in order to try to avoid tariffs, at least for now. You can call it the art of the deal. You can call it trying to reassure. You can call it a pay-to-play type of situation here. But obviously there is something to be said about companies that actually do make these announcements, make these overtures towards the White House, that they get favorable treatment. And it seems like Apple has been kind of lagging on that front over the last couple of months, but it seems like now they are trying to come to the table in order to avoid the tariff risk that is there. There's also going to be some benefits with the announcement that we saw yesterday as well. They are going to be working with their partners in order to try to expand the manufacturing here in the United States, and especially when you're looking at Corning. That was actually probably the biggest blockbuster move yesterday when it came to this announcement, announcing around a $2.5 billion investment to try to expand the Boeing operations in order to cover the iPhone as well as the Apple Watch glass that is made there. So you are seeing Corning move to the upside this morning. A really nice run for this company. What's actually very interesting, not only are you looking at the mobility aspect of this company, but also the fact that fiber optics just in general, when you're looking at some of those, the cordage and things of that nature that's needed for data centers is also in very high demand. So they are actually seeing some fairly significant tailwinds over the last couple of months here. So I think Apple is kind of coming to the table once again, maybe avoiding these tariffs, also putting out a little bit of a framework out there for other companies that might be impacted by tariffs. It seems like you got to put a little bit of money up, and maybe the administration is going to be able to give you a little bit of a carve out when it comes to some of the tariff impacts. And I think over the long term, if you're looking at this initial spend from Apple, over the long term, obviously with the reduction in tariffs here, their lack of impacts on tariffs actually probably was going to benefit them for a fairly long time there. So kind of an interesting move. And the last thing I want to say too is that for Apple, what they're probably going to do is actually push on their suppliers to get cheaper prices in order to kind of fund these operations. That's also kind of played in the cards here as well when it comes to this name.
Yeah, you read my mind, Kevin, because, I mean, while it might be a template for other companies, maybe some just don't have this sort of financial muscle to be able to do something like that, because there has been a lot of discussions about just how expensive it could be to onshore some of the manufacturing, particularly when you're talking about the supply chains. But no doubt we will, as you say, be watching some of those suppliers today and whether we see some spillover there for that. But I mean, it brings it back to the sort of motivations behind why Trump is targeting various trading partners with regards to these tariffs. I mean, you've got fentanyl, you've got purchases of Russian oil, you've got trade balances, but you've also got FDI, but you've also got these, sort of sectoral tariffs. And now Trump saying 100% tariff on semiconductors that are not made here in the US. I mean, it's been fascinating watching the Asian equity markets play out overnight in reaction to that. When you look at some of the Japanese chip makers versus, TSMC, which has a $165 billion commitment here, and the Samsungs of the world who are investing, tens of billions of dollars here too. So how do you see this playing out?
Well, I mean, you kind of bring up a really good point there. If you're kind of looking at it, Taiwan Semiconductor probably manufactures or has their hands in about maybe 55 to 60% of all chips that are made in the world. So if they're going to have an exemption, that's a pretty considerable part. Now, Samsung, I'm not sure if they're going to be exempted, but they might be making some overtures in order to try to reduce that. You're talking about the next 20 to 25% of chips there. So if you kind of look at this overall structure, you may only have about 5 to 8% of overall exposure for semiconductors actually being tariffed because of this policy, which is once again another reason why we are seeing this optimism moving forward when it comes to this space here, because everybody has made commitments in one way, shape, or form. Sam, we have to highlight as well, he is saying either you're going to manufacture here or make commitments here. If you notice, a lot of these commitments are very short term, 3.5 years, 4 years. We saw the same type of situation in the Trump 1.0, especially when it came to China as well as the agricultural markets here in the United States. The commitments themselves you can make commitments and then there's like a follow through. So I think a lot of these companies that might be even a little bit cash strapped may still make commitments, but how are they going to be held accountable 4 years, 5 years from now? Now, the Trump administration says that they are going to be held accountable, but this is going to be his last term, so I'm not sure how much they're going to be able to do so in the coming years. So a lot of companies might say that they're doing something, but we'll see. Next 5 years, 10 years, are they actually going to develop or not?
You raise such an interesting point because, I mean, this stuff just doesn't happen overnight as far as the onshoring is concerned. I mean, building up these supply chains can take 30 years. We've seen that over in China. But, I mean, to your point about TSMC, I mean, we've seen the culture clashes that they've been facing as well in some of their Phoenix factories. And, it doesn't happen quickly with regards to some of that labor and, the investment. So, yeah, raise such a fascinating point. Kevin, it's been a great chat. Thank you so much for that.